The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, and thank you for joining us for Drewry's LNG Shipping Market Outlook. Today, I am Aman, the Senior Manager for Gas Shipping at Drewry Maritime Research, and I'm joined by Pratiksha Negi, who's the Lead Analyst for LNG Shipping at Drewry Maritime Research as well, and Santosh Gupta, who's the Deputy Director for Drewry Maritime Financial Research. So thank you for both for being here. And today we are going to be covering the key insights from our latest forecaster with the theme LNG Shipping's calm before the chaos. Now today's session is going to be of around 20 minutes speaking time, and then we will have a Q&A round at the end. And this session is also going to be recorded and will be available afterwards. So without further ado, let us jump right into it. And what better than LNG trade? So Pratiksha, coming to you first, can you give us an outlook of how trade has been panning out in 2025 and what are the patterns that we are seeing?
Sure, thank you. Looking at the global LNG imports first, we see a very contrasting picture between Asia and Europe throughout this year. Now in Asia, the total regional imports are expected to be down by 3% year on year in 2025, pointing to a weaker year related to the past ones. Reason being, decline in gas demand, increased pipe gas and nuclear supply in major countries such as China, India and Japan. Along with this, higher prices have crowded out the price-sensitive countries in the region. However, South Korea and Taiwan appears to have a positive story due to the increased role of LNG in their power generation, with buyers trying, testing, and diversifying their import sourcing. And if we see Europe, it has showcased a renewed growth in 2025, with the continent's import projected to increase by 25% on the account of higher LNG imports with no piped gas from Russia, constant need to maintaining the healthy storage, improved gas demand in industry and power sectors, along with weak competition for spot cargoes from other regions. Overall, we are projecting 4 to 5% trade growth this year, with Asia's slow growth counterbalanced by Europe's strong rebound. If we look at the supply side, the trade will be further supported by the increasing global LNG supply, with 34 MTPA of the 46 slated for this year already being online so far. Among these, the US will leads the maximum capacity addition, and we expect this country to remain the largest exporter in 2025, providing most of its exports to Europe, which has been absorbing its new supply at large. Following the US, the next one is Qatar, which is going to be the next top exporter. It has also increased its supply to China this year, which is up by 15% since the country's tariff war with the US. In all, we expect global exports to reach around 430 million tons in 2025, up from 412 million tons the last year.
Thanks, Pratiksha. And while we are on this topic, let's also talk about the liquefaction projects and the FIDs. Now, there has been a strong revival in the FID activity in 2025. But do we expect this trend to continue into 2026 going forward? Or are there any concerns for the development of these projects?
Sure. Yeah, we indeed see an unexpectedly strong FID rebound in 2025, with over 60 MTPA securing their FIDs and another 30 MTPA expected in the remainder of this year. The US has commanded over 90% of these FID volumes thanks to the regulatory easing. Going forward, we expect about 90 MTPA of planned volumes to reach their FIDs in 2026, keeping this momentum intact. Now, the strong FID year has been supported by the robust LNG contracting so far, with 65 MTPA of SPAs signed in 2025 compared to 40 last year. SPAs are and will remain a key factor for the planned volumes. As massive pre-FID volumes remain uncontracted, we expect SPAs to continue being robust, preserving the future FID.
Thank you, Pratiksha. And as you have mentioned, the US is taking the lead and is accounting for almost 90% of the pre-FID volumes. However, there are concerns in the market about a potential oversupply that can happen in the later end of the decade. How does this scenario play out and impact or, let's say, support the buildup of these projects?
Yes, Aman. So the US is indeed playing a leading role in global LNG supply growth, and that dominance is a double-edged sword, implying both opportunity and risk for LNG shipping. We are seeing US as an opportunity for the near to medium term. The country will continue to be the dominant new source for LNG supply, and many of its export terminals are coming or nearing startup, which will going to increase its market share, of course. Of course, the demand is still recovering, especially in Europe, and Asia is expected to be stable in the coming years, and this growth can be observed through the new supplies from the US, supporting any incremental demand, be it Asia, Europe, or in any other region. But in the long run, especially from 2029 onwards, this is where the oversupply risk becomes particularly significant. And if many US projects and others come into service, while demand growth remains moderate, especially in Europe, then the US growth in export capacity will contribute significantly to the surplus. And at that point, US producers may face margin squeeze, and therefore some projects may get delayed, cancelled, or even repurposed. And therefore, we remain a very skeptical outlook for the pre-FID volumes that are going to be or scheduled beyond 2028 and 2029.
Thank you. Now, in all scenarios, we do see that there is going to be a massive liquefaction capacity addition in the coming years, and that is going to translate to a lot of vessel demand, which leads us to the fleet development and how it is going to happen. And allow me to just go by it. So the LNG fleet is expected to expand at a CAGR of 9.5% between 2025 and 2030. This is driven by a robust order book with over 300 LNG carriers. The order book has been deflating as of late. That is because the ordering momentum has died down in 2025, with the total orders being half of what we saw in 2024. In fact, the number of LNG bunkering vessels orders has been much higher than the LNG carriers in 2025. Now, the impact on LNG carrier orders is due to higher orders in 2023, 2024, the higher global prices, and market uncertainty related to the USTR regulations, and also the technological risks that are with the LNG carriers. So the owners are worried whether the vessels that they are going to be ordering, whether they can complete their total life cycle of, let's say, 25 to 30 years or not. At the same time, we do see a very robust delivery schedule. In 2025, we have seen 67 vessel deliveries so far and expect a total of 89 to 90 vessels to be delivered in this year, which is going to be a record high. But it is going to stay for a very short while because we expect this record to be broken in 2026, then again in 2027, and so forward in 2028-29. So the deliveries are going to be higher, and the ordering momentum, while it has been low in 2025, we expect that there is going to be a rebound for adding new vessels to cater to the massive liquefaction capacity that is going to be coming, but also for the vessels that are going to be demolished. Now, our demolition outlook has accelerated. In 2025 itself, 14 vessels have been scrapped so far, with our indication of around 20 vessels to be scrapped by the end of this year, and the further explorations along the year with emission and economic factors affecting the viability of the older vessels. At the same time, conversion demand has been rising. We have seen an increased number of vessels for FLNG and FSRU projects that is going to influence the market. So to all to put all of these factors together, the deliveries, the demolitions, the removals, the new capacities, Pratiksha, I can hand it over to you. Just summarize and bring us to the climax of how the rates are going to be performing, what have they done in 2025 so far, and what is the near-term outlook?
Yeah, thanks, Aman. So 2025 has been a year of extremely low rates. Several influencing factors have played their part here. Now, from the demand side, subdued Asian demand with regional imports down 3% this year, increased intra-basin trade with trade between US and Europe increasing this year, and China's pivot to Russia and Qatar following its trade war with the US. All these factors have dented the overall ton-mile generation, resulting in lower utilization. Now, from the supply side, high vessel deliveries have contributed to strong fleet growth despite increased demolition, which has outpaced the trade and liquefaction growth, countering any positive upside that we have seen this year so far. Moreover, several steam turbine carriers are coming off their charter, impairing the vessel supply and leading to high vessel layups, which are more than the double the last year. All these downside factors have collectively weighed on the rates, negating any seasonal upticks and incremental demand driven by any geopolitical events in 2025. And with all that, here we are in 2025, which is about to record a historic low with rates for DFD carriers to be down by 57% year-on-year basis, and that of XDF and Negi by 55%. For this winter, we are witnessing a surge in rates, and primarily due to the higher withdrawals in Europe, and with the continent entering this winter, or I would say November, with less than 90% of storage. The higher demand towards the end of September and October was also led by the decline in Europe's LNG sendouts and lower flow via French terminal, which remained affected by the local strikes. All of this have led to a surge in recent surge that we are seeing in the first week of November, with Atlantic rates crossing 50,000 USD per day. However, we believe such spikes will be short-lived under Europe experiences a cold snap or an extended winter. Otherwise, these temporary seasonal upticks will have a limited impact on market balances, and thus we expect shipping rates to record their seasonal low during the fourth quarter of this year over the last 5 seasons.
Thank you. And also a very quick outlook on the long-term rates as well.
Sure, Aman. So as we move forward, we remain cautious about the 2026, and we expect a slight improvement in rates, which will largely depend on the increased demand, especially in Asia, which has suffered this year. Moreover, Europe's further pivot from Russia and China's renegotiation with the US will be critical in determining the trade growth next year. And liquefaction addition will maintain its pace, but 2026 will welcome another 100 plus vessels, keeping the supply growth well above the liquefaction buildup. And therefore, any significant uptick in rates will be limited. However, as we enter 2028, the market will start rebalancing with about another 60 MTPA of new liquefaction capacity being added. This support will be provided from higher vessel scrapping, as over 150 steam turbine carriers will find it difficult to seek any employment under a highly stringent market, with these vessels unable to make up to their operating cost as well, making them highly redundant in the long run. And from 2028 onwards, when we enter to an improved supply-demand balance side of the market, it will boost the utilization rate, and we anticipate the rates to surge, supported by the long-haul trade, increasing the overall shipping demand, which will be largely supported or catered by the modern carriers, which will have a premium over the other carriers available during that time due to their high efficiency and more compatibility to an evolved or highly regulated market. Thus, we remain optimistic about the LNG shipping rates for these carriers in the long run.
Thanks, Pratiksha. And there you have it, folks. That's the bottom line. The market is expected to be weak between 2025 and 2027, but there is recovery on the cards, and the market is going to do phenomenally well as we go to the end of the decade. Now, of course, there are some concerns if there are some delays to the projects that are coming that can deflate these projections and create some risk. Also, with the OPEX levels as seen, the steam turbine carriers are already on their way out, with rates projected much lower than their OPEX. And the same phase out can be expected for the diesel electric vessels as well down the line, as these are also going to be coming under the increased scrutiny of emission regulations going forward. So yeah, thanks very much, Pratiksha. And now we can move on to the equity side of the research, and we have Santosh Gupta with us. So Santosh, let's discuss the performance of the Drewry LNG Shipping Equity Index in 2025. I remember the LNG Shipping Equity Index was at time up by 11%, but has since declined. So can you discuss why has it declined?
Sure. Thanks, Aman. So as you rightly mentioned, at one point of time, the LNG equity index was up more than 11%. However, at present, the index is only up 3.5% YTD. It has mainly retreated because as Nakilat stock has declined 7.7% in the last 3 months. The stock has the highest weightage in our index because of its large cap. And in our view, the stock may have been impacted due to the rise in operating expenses and also the reduced joint venture income, which we saw in their latest results. Now, talking of the individual stocks performance, Flex LNG is the best performing stock, up 15.4%, followed by Nakilat, which is up 7.2%, and Gullar LNG, it's down 5.1%.
Thanks, Santosh. And you mentioned Flex LNG is the best performing stock. Could you just elaborate a little bit on why it is the best performer?
Yeah. So amid the softness that we are seeing in the LNG's spot shipping rates, Flex LNG is a company which had majority of its vessel on locked-up charter. I think there is only one vessel which is in the spot market. Now, if we talk of the last few months, the company has focused on balance sheet optimization, and they have refinanced 3 of its vessels, resulting in a net proceed of $132 million. And this also reduces their cost of debt, which they expect to be around 5.6%. So these are some of the company's specific factors driving it. Apart from this, the ongoing new LNG liquefaction projects which are coming on stream and the recent record FID which we are seeing in the North America, they are also positive for Flex LNG. In addition, the company has maintained its dividend and also announced a share buyback of $15 million. So all these are positively impacting the stock.
Thanks. We can look also on the other companies, let's say Nakilat. Now, Nakilat has seen some very new developments. So can we discuss the new developments that have happened and also the latest 3Q25 results?
Yeah. So of late, what we have seen is Nakilat has acquired stakes in some of the joint venture that it had. So they are now fully on Qatar Shipyard Solutions. And in the previous quarter, which is 2Q25, they acquired full stakes in the LPG joint venture. Talking of 3Q25 results, the company's total revenue increased 6.4% YOY to $330 million, while their net income increased 2%. The company's EBITDA was almost flat. The company's revenues have mainly benefited from the acquisition of the joint venture stake in the shipyard business. However, this has also led to increase in their operating expenses, which is up 24%, and this is partly due to the consolidation of the shipyard business.
Thank you. Let's also talk a little bit about Gullar LNG and particularly its exposure to the FLNG sector.
Right. So last month, Golar has been making significant progress on the 3 LNG projects which they have. So last month they announced that they have satisfied a condition precedent for the 20-year charter of MK2 FLNG in Argentina. And this will translate into about $8 billion EBITDA backlog over a 20-year charter period. This vessel is expected to be delivered in 2027 and start operations from 2028. With this, each of the 3 FLNG vessels which Golar LNG has, they have 20 years of earning visibility and a combined revenue backlog of $17 billion.
Yeah, and the FLNG sector is very hot right now. In 2025, we have already seen 4 new orders. There are in total 7 FLNGs on the order book and another 2 under conversion. So yeah, there is a lot happening in this sector. So let's move on and let's see a little bit further. So Santosh, how do you see these LNG shipping companies' prospects for 2026?
Yeah, so one thing which is common and is going to impact all the LNG shipping companies because most of them have high leverage is the ongoing interest rate cuts. So with this interest rate cuts, we expect that their financial expenses should come down in 2026. I think in 26, the focus will be on Nakilat, which is expected to see delivery of 3 to 5 new LNG vessels, and that's going to come between 2024 and 2024. And all these LNG vessels are on long-term charter to Qatar Energy, so this should start contributing to the bottom line immediately. Now coming to Flex LNG, as we talked, they have refinanced their debt and their cash balance as of 2025 was $413 million, which I believe they can use for either increasing the dividend or share repurchase or even adding to their fleet size. Coming to Golar, their FLNG Hilli contract is coming to an end in July 26, and before the next contract, the vessel goes for some modifications. And as we spoke, the MK2 FLNG is undergoing conversion for FLNG as of now.
Thanks, Santosh. And let me quickly take our audience through the key takeaways from this session. So the global LNG trade is expected to be moderately up in 2025. Asia is still driving, but Europe is also showing renewed strength. The FID activity has rebounded in 2025, and the trend is going to continue into 26 with the same next wave expected. Rates, on the other hand, are going on a 5-year low in 2025. We do expect the 4Q rates to be slightly up, but on a year-on-year basis, they are going to be historically low. And there is going to be a slight improvement in 2026, very likely, but it's not going to change a lot in the market. The long-term outlook, however, is still very strong on an improving supply-demand balance with all the vast liquefaction capacities that are going to be coming near the end of the decade. In terms of fleet, it has been expanding with record high deliveries. The ordering has been low in 2025, but we do expect a rebound from the end and in 2026. There is going to be a massive capacity buildup, and there is a vast vessel demand that needs to be filled, and that is leading to the LNG fleet to be expanding. Along with it, there is also going to be a surge in the orders for LNG bunkering vessels. We have already seen it grow in 2025, but as the alternative order book grows, and we are now expecting over 1,000 LNG fuel vessels, excluding the LNG carriers, to be in service by 2027, there is a demand for a lot many LNG bunkering vessels. So a lot many companies are also looking into it. Now, with that, let's move on to the question and answers and try to, just tackle some of the queries that we have received. And I see that we have a few minutes. So yeah, first one, I think Santosh, this one will be for you. So combining the weaker rate outlook that you have projected for 2025 to 2027, and also the vessel demand requirement, that the supply demand balance squeeze that you're expecting for 2028 and onwards. Which company do you back in terms of your coverage?
Yeah, thanks, Aman. So amid this weaker spot rates that we are projecting, I think I would prefer companies which have a high revenue backlog. So Nakila, with a revenue backlog of say USD 54 billion, is one stock to look at. Another one would be Flex LNG, with majority of its vessel on long-term charter, and also the significant cash and cash equivalent of USD 434 million, which I think they can use it for increasing the dividend or share buyback, or perhaps increasing their fleet size as well. So these are the two companies that I would look at for investment.
Thanks, Santosh. Let's take the other one, and I think Pratiksha, you will be able to have this one. So, what according to you are the potential risks that could hamper the long-term LNG shipping outlook, as we are expecting a surge in rates?
Sure, Aman. So there are some potential risks that are lingering over the LNG shipping that can be, detrimental to the rates in the long run. One of those can be the growing China's pivot to Russia and its ongoing discussion over the power of Siberia too, which in case materializes, in the next 5 years or so, then it can impact the country's LNG demand beyond 2028 and 2029, which could, which could have a negative implication for the total, for the overall LNG shipping. Another one can be the expected delays or potential delays in the projects that we are, eyeing over the next 2 or 3 years. Any slippages or any such delays can, hinder the expected liquefaction capacity addition in the forecast period. Any geopolitical event, related to any upheaval in the ongoing geopolitical events can also be, very detrimental for the LNG shipping. And since we are seeing that Europe is pivoting towards US more, and it is, trying to curb its reliance on Russia, and if it imposes its complete ban on Russian LNG by 2027, then this could also create some hurdle for the total shipping demand, because then we'll see more of, intra-basin trade taking over the cross-basin one. So all these factors, if they, come into play and, at one time, then it can have severe dire consequences for LNG shipping in the long run, and it can then impact our outlook for the shipping rates.
Thanks, Pratiksha. Let us take a few more. Okay. What are your thoughts about the Russian LNG sector? Do you see any progress or any improvement there, or do you see any impact happening in the coming years?
So for Russian LNG, what we are projecting and saying is that we do not see any new capacity addition till 2030. All its planned projects, be it Murmansk LNG or Arctic LNG, phase 3 and beyond that, they remained highly speculative, given the constant, sanctions and opposition from the West. And therefore, we are not projecting any upticks in Russia's total LNG capabilities. So far, we have seen that the country has been able to maintain its operational terminals, and they will be able to, because by group, Europe remains its largest buyer so far, and we haven't seen any stringent sanctions coming from this region. So I think they'll be able to sell their operational volumes that are operating so far. But of course, by 2027, I think the sector will, face some heat if Europe completely bans LNG from Russia.
Correct. And just to add, there have been a lot of cargoes from the Arctic LNG to I think 13 or 14 cargoes so far that have landed and discharged in China. And it's also going to be interesting of what is going to be happening there. So far, UK has put a sanction on the Drewry terminal in China, whereas other players are considering it. I think they are going to wait and see approach. Also, it would be interesting to see how Russia would be able to utilize its limited Arc-7 fleet, the ice class vessel fleet, under the harsh winter icy conditions, and how far it can push the sanctioned vessels as well. So yeah, altogether in the near term, this is going to be one of the cases, but overall, it doesn't look very rosy. Speaking about Russia itself, there has been a development about the Power of Siberia 2 pipeline that there was a memorandum of understanding with China. What kind of impact do we see on China's LNG imports and demand in our forecast period?
Of course, these discussions were there before, 2025 also, and we didn't see any concrete decisions being made on the same. But of course, the dynamics are changing now. China is trying to, reduce its reliance on US, and therefore it is pivoting towards Russia. And if in case the deal gets materialized, we do not see direct impact till, let's say, 2029 and 2030. It's just an MOU that has been signed. This will take time to materialize, and of course, the capacity, the Power of Siberia will have around 36 million tons of volume, and it's again, the question is on the feasibility of this pipeline. And pricing has always been an issue between these two countries, and again, no concrete decision has been announced or made about the pricing. So these discussions have been there and they will continue. And in case this materializes, of course, this will have a very dire impact on the China's LNG demand in the long run. And beyond 2030, of course, it can, through our estimation, it can reduce by 30 to 40%. But again, I think till 2030, we do not see this deal materializing, and thus it will not have much impact on China's energy demand LNG shipping.
Thank you. And a similar question for you on China's energy trade itself. So we have seen the USTR, China's reciprocal countermeasures, and also the tariff wars that was happening between the two countries, and the recent pause that they put for 1 year on it. So overall, do you see any impact on the LNG trade between these two countries? Do we see an improvement, or whether it will say, let's say, status quo?
Giving any concrete answer, yes or no, about China and I would say US is it's still very tricky, and the evolving geopolitical dynamics between these two countries have confused a lot of market participants, including me itself. It's all gray between China and US, but if we see the recent USTR imposition and China's reciprocal fees, we did see that the havoc was created for a very short time, and then they again renegotiated and paused the ongoing discussions. So in the near term, I would say it will not have direct impact on LNG shipping, but of course, US-China trade dynamics will play a very pivotal role and crucial role for LNG shipping in the long run, especially from 2026 when we are seeing about 50 plus MTPA of SPA scheduled to be traded between the two. It was manageable in 2025, but of course, as we go beyond 2025, this situation will become tricky for both the countries, and of course, they will have to come to a point where both parties can create some negotiation for each other's benefit. So yeah,
definitely, yeah, that is going to be a very high risk factor. That is why in all our projections we are now putting a note that TNC apply, but it's not related to terms and conditions. It's related to Trump and China. I think we have for one more. Let's take the last question. We do have plenty more, but we are at a paucity of time. But we will definitely, send out emails for them. So yeah, so the last one is about the fleet, and I think I can take this one. So the scrapping activity in 2025 is at a record high. How are you seeing demolitions panning out, especially with the postponement of IMO's net zero framework? Yeah, so the IMO's net zero framework for all others, the decision has been delayed of how to formally incorporate it. They had a meeting in October this year, but they have delayed it by a year to October 2026. And with that, there have been some pros and cons. For LNG overall, it has been a pro. LNG at the end is a fossil fuel, and there was a lot of scrutiny on it. But now the future looks a little bit brighter. In terms of the ships, yes, the environmental pressure, the emission pressure with the methane slippage and everything, that is going to be a little less with the net zero framework delayment. But at the same time, we do expect that the commercial factors, the OPEX, the economic viability is going to be a very big factor. Overall, we see that the ship owners' confidence is going to be, tainted by this, and especially for the older vessels that we have, and they would more likely go towards the more modern and the more efficient vessels that are going to be ordered. So yeah, altogether, our scrapping activity, the outlook is expected to accelerate. And we expect over 100 vessels to be removed by the forecast period. Okay, so I think that would be the last one, and I see we have exceeded so far. So I think we can end the webinar for right now. And on behalf of Santosh and Pratiksha, I am Aman, and I thank the audience for attending the webinar with us. If you have any queries, further queries anywhere down the line, our email addresses are already showcased on the screen. You can write to us, send in your queries, and we will try to promptly reply to them. So this is me signing off. Thank you very much, and have a nice day. Bye-bye.